Most passive income advice online is complete garbage. Crypto schemes? Dropshipping courses? Fake gurus promising you'll be rich by Friday. Here's the truth. Real passive income is boring. It's not flashy, it doesn't go viral, and nobody's going to sell you a $40,000 course about it. But it works. And right now, in June 2026, there are 5 strategies Australians are actually using to build real income while they sleep. I'm going to show you all 5. From the safest to the one with the biggest upside. And by number 5, you're going to realize you can start it tonight with $0. No fluff, no schemes. Let's go. Idea 1, high interest savings accounts. And before you click away, hear me out. Right now in 2026, Australian banks are paying savings rates that were unthinkable 5 years ago. The best ongoing rate right now is 5.75% per year, offered by Westpac Life for Australians aged 18 to 34. The best no conditions rate, no minimum deposit, no withdrawal restrictions, sits around 5.1% per year on $20,000 in savings. That's over $1,000 per year in interest. Doing nothing, not a single extra action. That is real passive income. Your money is also government guaranteed up to $250,000 per bank. Zero risk on balances below that. Compare current rates at canstar.com.au/savings accounts. They update the table every single day. One warning, watch out for honeymoon rates. Banks love advertising 5.9% for the first 4 months. Then it drops to 4%. Always check the ongoing rate, not the intro rate. Idea 2, bonds. I know, not exciting. But stay with me for 60 seconds because this one changes how you think about building income. A bond is essentially a loan you give to a government or corporation. They pay you fixed interest regularly. The rate doesn't change, the payments don't stop, and unlike shares, the price doesn't swing dramatically with every piece of news. The easiest way to access Australian bonds is through VAF, the Vanguard Australian Fixed Interest ETF. It holds government and corporate bonds, pays distributions quarterly, and has one of the lowest fees of any ETF on the ASX. Think of bonds as the shock absorber in your passive income portfolio. When the share market drops 20%, your bond income keeps arriving on schedule. It's the part of your portfolio that never panics. Use bonds to build a reliable income floor. Use shares to build growth on top of it. That combination is what serious passive income investors in Australia use in 2026. Idea 3, Australian REITs. This is the one that surprised most people. An A-REIT, Australian Real Estate Investment Trust, lets you collect rental income from commercial properties without owning a single square metre. Shopping centres, office towers, industrial warehouses. You buy units in the trust on the ASX. They collect the rent. They pay it to you as regular distributions. Scentre Group, the company that owns Westfield shopping centres across Australia and New Zealand, is currently paying 4.36%. You are literally collecting a share of the rent from some of Australia's busiest shopping destinations. Charter Hall Retail REIT is paying 6.5%. The Charter Hall Long WALER-EIT is currently at 7.4%. You buy A-REIT through any brokerage account, Perla, Stake, Cumsec. Same process as buying an ETF, distributions paid quarterly or semi-annually. One important note, A-REIT prices move with interest rates. When rates rise, values often drop. These are income investments for people with a medium to long time horizon, not a short-term trade. Quick check-in, 3 ideas down, 2 to go. So far, high interest savings at 5.75%, bonds through VAF for reliable quarterly income, A-REIT for property distributions without the landlord headache. The next 2 ideas are where it gets really interesting. Stick around. Idea 4, dividend investing. And this one comes with a tax benefit that most Australians still don't fully understand. When you own shares in Australian companies, many of them pay you a regular share of their profits. That's called a dividend. And because those companies already paid 30% tax on those profits before distributing them. The government gives you a credit to avoid double taxation. That's called a franking credit. For investors in a lower tax bracket than 30%, franking credits can actually result in a tax refund at tax time. You earn money from the dividend, then get more money back from the government. That combination is uniquely powerful and unique to Australia. The simplest way to access this is through VAS, the Vanguard Australian Shares Index ETF. It holds the top 300 companies on the ASX and is currently paying 4.81% in dividend yield. The last distribution was paid in April 2026. If you want to maximize your dividend income, specifically, VHY is the Vanguard Australian Shares High Yield ETF, focuses on the highest paying dividend companies on the ASX and is currently yielding above 5%. On $50,000 in VAS, you'd receive approximately $2,400 per year in dividends. 4 payments direct to your brokerage account while your capital stays invested and keeps growing. Dividends are not guaranteed. Companies can cut them in tough times. But Australia's largest companies have strong long-term dividend track records. And with franking credits on top, the real after-tax yield is often significantly higher than the headline number. Idea 5. Digital products. And I saved this one for last because it's the only strategy on this entire list that you can start tonight with $0. A digital product is something you create once and sell an unlimited number of times. An ebook, a Notion template, a budget spreadsheet, a Canva social media pack, an AI prompt bundle, a property investment calculator. Once it's created and listed, there is no cost to deliver it, no shipping, no inventory, no manufacturing. Every single sale is close to 100% profit margin. You can be asleep in Sydney while someone in Melbourne downloads your product and pays you. The 2 best platforms right now are Etsy and Gumroad. Etsy has 4 times more buyer traffic than Gumroad. Your products get discovered without you needing an existing audience. Gumroad gives you more control and a direct relationship with your buyers. The most in-demand digital products for Australians in 2026 include budgeting spreadsheets, property investment calculators, resume templates, Canva social media packs, and AI prompt bundles. The price point that converts best is between 19 and 49 Australian dollars. 10 sales per month at $25 is $250 of completely passive income from work you did once. Most creators see their first Etsy sale within 2 to 4 weeks of listing. Consistent income typically takes 3 to 6 months, but unlike every other idea on this list, you can start building it tonight. 5 passive income strategies for Australians in 2026. 1. High interest savings, earning up to 5.75% right now. 2. Bonds through VAF, your income floor that never panics. 3. A-REIT, property distributions without being a landlord. 4. Dividend ETFs, VAS at 4.81%, VHY above 5. 5. Digital products. The only one you can start tonight with $0. Here's your challenge. In the next 24 hours, pick just one of these 5 ideas and take one concrete action toward it. Compare savings rates at CanStar. Look up VAS on the ASX. Open a Perlo account, or just open Canva and think about what digital product you could create. One action. 24 hours. Drop a comment below telling me which idea you picked. I read every single comment and I'll reply personally. If this video helped you, hit subscribe, because next week we're covering how to pay off your mortgage 10 years early in Australia. And the numbers will genuinely surprise you. I'll see you next week.